11,000 on Nifty. Talk about playing hard to get, because in the last 3 to 4 months, we have been toying around that 10,650 to 10,950 mark. And today as well, apart from earnings and the fact that the crude is a bit subdued, there is no macro push to really take us higher and make us cross the 10,950 mark.
Absolutely. While there is no macro push, it will be very important to see whether we bounce back from here or not, because we're very near to the crucial support zones, be it the 200-day moving average, the 20-day moving average, the 100-day moving average is at 10,800. And more importantly, it's the Nifty Bank weekly options expiry.
Oh, yes.
So let's see where that goes. We have a lot of results to contend with. First up, all the top stories that we're tracking, and then we get cracking on individual stocks and results. Wall Street gains on positive earnings, though trade concerns linger. Asia starts the day on a mixed note.
Piyush Goyal given temporary charge of the Finance Ministry as Arun Jaitley remains in the US for medical treatment. Goyal likely to present the union budget on Feb 1st.
The GST mop-up for December may remain weak. Sources say the collection figure for the month may come in between 94,000 to 96,000. That's a CNBC TV 18 exclusive.
Now at $100, you're consuming 11, 12 gigabytes of data a month. So you're consuming 10, 11 times more and paying half or less than half. So I would say at some point in time, depending on when, this should come back to 250, 300 rupees.
Bharti Airtel Sunil Bharti Mittal says telecom tariffs must go up from current levels and rules out further reduction. Expects 3 top players to stay in control in Indian telecom space, as he adds that Bharti is holding on pretty well to its market share.
Big earnings to watch today. We have numbers from Yes Bank. Street awaits divergence number for FY18 balance sheet. Also, Ultratech and Biocon report their third quarter earnings later today. All right, before we open our bourses, it's a time to look at the Asian markets. Well, they are mixed in today's trading session. There's more of the same for the Asian markets for the last couple of weeks. If we take a look at the sort of moves that are taking place at the start, at least, there is uncertainty over the global economic outlook and the ongoing US-China trade tussle. The Korean markets, they're the ones which are trading in the green. Just keep an eye out on the dollar yen. For the last couple of days, it's been hovering around the 109.5 to 110 mark. Between that, that's still strong, weaker than the number that we saw sometime last week, about 108. The Korean markets primarily outperforming on account of chip maker SK Hynix doing fairly well. That has a fair weight on that index. It reported weak numbers, but the stock moved higher despite that. The Straits as well as the Taiwanese indices sitting with a gain of about 1/3%, not too much in terms of a move. For the Nikkei itself, the January Nikkei manufacturing PMI has come in at 50 versus 52.6. That indicates a bit of a contraction month over month. The SGX Nifty, after testing or closing at the 20 and 200-day moving average, for starters, indicates that we may see a bounce from those crucial levels. Important to see whether we get sold into or not.
Okay, so that was about the Asian markets, but on the Wall Street, the stocks closed higher as upbeat earnings from corporate heavyweights helped to mitigate lingering worries over global growth as well as the US-China trade tensions. Now, the Dow ended 170 points higher, but the S&P 500 and the Nasdaq were toying around the flat line and ended with a tad bit of positive bias, because the S&P 500 gained around 0.2%, led by gains in the consumer staples sector, while the Nasdaq composite ended with a gain of just 0.1%. CNBC's Josh Lipton gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks finishing higher despite falling into negative territory midday. The Dow adding 171 points. S&P and Nasdaq both up 5. It's day 33 of the government shutdown, and the Bureau of Labor Statistics says all federal workers will be counted as employed in the Labor Department's January jobs report, since they will be paid retroactively. Hulu is hiking the price of its live TV option from $40 to $45 a month, while also lowering the price of its most popular monthly plan from $8 to $6. The increase is effective February 26th and comes just 1 week after Netflix announced it would increase subscription prices to cover rising content costs. Amazon is launching a new self-driving delivery service called Scout, which the company says will navigate itself to customers' doors and open a hatch that will allow the customer to retrieve the package. The e-commerce giant is rolling out the service in Washington State today, starting with just 6 devices. That's the action from the U.S. market. Now back to you in Mumbai.
All right, with that, let's hear out what experts are making of the market volatility and the likely onset of signs of recession in the near term.
I think you can expect continued volatility, and we think that's more of a strategic change rather than sort of tactical. As you get later in the monetary policy cycle, as you get to the place we are now, where people are arguing with whether we're at neutral or close to neutral or just above neutral, there usually happens to be an increase in volatility as you get to that point in the market. So the volatility we've seen that's increased the past couple of months is not a surprise to us, has not been a surprise to us. You should expect more volatility when people are unsure as to the right stance of monetary policy is.
Our own view is that it'll probably be later than 2020, and we think there's a significant difference between 2020 and later. And the reason being is because a lot of the risks we see out there that people are worried about have to do with leverage. And if we can get another couple quarters of growth, the amount of deleveraging that can occur during those quarters can be significant. And so if we're expecting a recession in 2021, someone's expecting one in 2020, your market outlook actually becomes markedly different.
Okay, and the World Economic Forum is underway in Davos, and we have been getting you all the important voices from India Inc. as well as the global voices. So here is one more such voice. JP Morgan's Jamie Dimon has said that the US economy is like a ship trying to navigate its way through difficult waters. It could hit a slowdown or even a recession. And going into day 33 of the government shutdown, he adds that it is high time that the lawmakers resolve the situation.
The U.S. economy is kind of like a ship that's growing X the shutdown 2 to 2.5%, and that's going to keep on going for a while. Then you have all this other noise, okay? Geopolitical noise, Brexit noise, what's the Fed going to do? I'll talk about that in a second. Shutdown, trade, and they're kind of like boiling the waters in front of that ship. So eventually that may very well cause a slowdown or a recession. And I don't know if it's 2020 or 2021, but the range of possibilities is broader. And the range of bad outcomes is increasing.
Yeah, but if something really good happens, you get a tailwind. If we did something,
yes, yeah.
So then it's not 2 to 2.5. Then we're back to maybe 3.
It's possible, and I think the Fed will look at what's going on. I mean, my guess is they'll probably pause now. But if they raise rates again in 6 months or so because we're growing at 2.5%, that's still a good thing. If it lasted the whole quarter, it could make growth zero. Now I don't actually know. We all think it's kind of a hockey stick that actually exponentially gets worse as people stop spending money and restaurants don't get money and they don't spend and vendors, and we just don't know. We've tried to figure it out, but it's not a plus. It's just not a plus out there. I thought the president actually moved a little bit. Well, he spoke about $5.7 billion. Part of that was, I think, like $1.5 billion was things that Democrats wanted. Everyone wants the DACA to stay. You know, you can argue 3 years permanently, but to me, there's the makings of a deal, and they should make a deal because it's going to get worse for the American public.
All right, with that, let's take a look at the European markets. They ended lower amid uncertainty over trade talks between US and China. So we saw a cut of almost 0.8% of the FTSE, a mild cut seen on the CAC as well as the DAX.
Okay, let's shift focus now to the world of currency because the dollar index softens as global concerns over the growth as well as the US government shutdown and US-China trade talks weigh on this sentiment. While safe haven Japanese yen trade higher versus the US dollar. The dollar index currently just above the 96 mark.
In the world of commodities, crude oil prices dipped on economic slowdown concerns but was supported by expectations of lower US crude stockpiles, slowing growth in the US shale oil output in the coming years.